Mark, no surprise in the market. We're now flipping into positive territory with the Dow, the S&P erasing the gains, the dollar is dropping. You're seeing yields come off a bit from their highs. What's your reaction to what we just heard?
It suggests that the Fed is continuing to do whatever they need to do to try and support this economy. The Fed has been very swift in everything that they have rolled out. They've announced new programs this morning, and it seems like they're being increasingly flexible in doing whatever they can to try and provide support to the markets and, in turn, the real economy.
Do you feel like this is all enough now that we've gotten some more details about the Main Street program, et cetera? Do you feel like this is enough?
I think this takes care of the last remaining programs that we were expecting to see. We had thought that there would be a muni program. We knew that there would be more detail coming about the Main Street lending program. And I think that the expansion of some of the collateral in TALF and also the upsizing of the secondary corporate credit purchase program are all things that we were anticipating. So I think that this takes care of the vast majority of things outstanding that the Fed, that we were expecting the Fed to do. Now, there's still some additional tweaks that we think could be coming. We think that some of the rates on the facilities could be lowered, in particular in order to try and support a more rapid drop in LIBOR and provide more direct stimulus to LIBOR-based borrowers. That's really the only remaining thing that we're looking for at this point in time. But it shows that the Fed is willing to do whatever they can to try and support the markets, and that should improve the flow of credit into the real economy, which is exactly what the Fed's aim is.
And then in terms of what they're offering with the banks, basically, as Mike was saying, that the Fed now asking the banks to take on some risk as well, with the Fed taking on 95%, the banks taking on 5%. Do you think that's going to be good enough for the banks to feel okay about lending to these small and medium-sized businesses?
Yeah, I would assume that that's right. Asking the banks to hold and retain a 5% piece of these Main Street lending program loans that they are offering, I don't think is unreasonable. The banks are the primary conduit that the Fed needs in order to deliver the stimulus more directly into the real economy. Given that these loans are not guaranteed or don't have the backing of the SBA, like the PPP loans do, or the Small Business Administration, like the Paycheck Protection programs do, I think it's reasonable to ask the banks to retain a little bit on their balance sheet. I would think that the Fed is going to offer relatively favorable terms in order for banks to make these loans as well. And so I would expect that the banks should be willing to go along with this. I also think it's encouraging what the Fed is doing with these Paycheck Protection Program loans. This seems like a very, very popular program that's been introduced. It doesn't have particularly onerous conditions for the businesses that get those loans. And the Fed is essentially going to be taking those loans off of the balance sheets of the banks that originate them, and thereby allowing the banks to continue to originate more credit and make more loans to the real economy. So I would think that what they're doing with the Main Street program as well as the PPP program should all help get credit and lending going again, and at least provide some additional stimulus as long as the economy continues to be affected by the virus.